is it possible to remake the American healthcare system with UnitedHealthcare?
No, they're not going to be incentivized to change at all.
Well, right. So then the way that you would remake the American healthcare system is to ensure that UnitedHealthcare is destroyed. Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the cash flow memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Like last Wednesday, not too much to say about Exhibit C. OPEC Plus did go up another, or say they're going up another 400,000 barrels a day in July. So that's May, June, July, times 3, that's 1,000,002. Their curtailment as OPEC Plus is 2.1, so 1.2 is more than half of 2.1. So give them another 3 months and that curtailment will be gone. Saudi Arabia is an extra voluntary, in quotes, 1,000,000 barrels a day. So if Saudi Arabia started to phase that into the market, this schedule, which shows Saudi Arabia producing 9 million last year and 9.7 this year, they get out at a run rate of 11. I don't see how the price of oil holds up if that's what happens. Clearly, what's the Saudis and the other countries in OPEC or OPEC Plus that can produce extra oil are tired of the cheaters. They're increasing their production. It's a gentle market share, but it is a market share strategy by Saudi Arabia. With the 4 million barrels of extra capacity, 2 of it belongs to them. On Exhibit B, the bottom, price of oil is down a full $10, average 25 versus 24, and then 26 at this date was 60, so the backwardation has disappeared. But the price of gas is good, it's kind of hanging around the $4 range. The power demand, despite all the publicity about AI and effect on power demand, is gas for power is a little flatter this year than prior years. Fortunately, LNG is very good. I mean, it will average 16 this year and probably 18 or 18 and a half next year. So as long as dry gas production at 106 average this year doesn't go up by too much, I think that $4 gas will hold. It quickly gets us to Exhibit A. And this estimated 26 is a pretty good estimate of what the big, beautiful bill, the resolution bill, calls for. Now, Elon Musk has said that it's not big and beautiful and is going to mount a campaign saying that the spending is just extremely too high. And the basic theory, I think, is that we should be headed towards the deficit being $1 trillion rather than 2. And that you can see on the top, the revenues keep going up. For those who don't have the paper in front of you, our revenues in 2019 were $3.5 trillion. And then they were down a little in 20, COVID. They recovered in 21 to 4.1, 22, 4.9. Don't quite understand why 23 was down at 4.4, but then they got back to 4.9, 5 trillion to a little over 5 trillion, 25, 5.4 this year. So the revenues are going up every year, but the spending, overall spending in 2019 was 4.5, and then it went to 6.5 in the first COVID year and 6.8 in the second COVID year. And then with Biden in office, it didn't come off very much. It was 6.3 in 22, 6.1 in 23. And so, we continue to run this big deficit. And the only way to solve the deficit, if you look at the numbers, is to somehow get healthcare down. Healthcare of the 26 estimate is $1.6 trillion, $1.2 trillion for Medicare, and $600 billion for Medicaid Those numbers in 2019 pre-COVID were 800 million for Medicare and 410 billion for Medicaid. The increase in Medicare and Medicaid is not as much of a problem, but it's everything else. I mean, interest in 2019 was 400 billion, and now it's $1.2 trillion. And that's just a result of interest rates being higher and also running deficits. Defense in 2019 was 640 billion, and now it's 900 billion, although the bill it calls for defense spending of $1 trillion, which is probably excessive. I think that Elon Musk, who's pretty unpopular in many quarters, should be congratulated for bringing up Doge, but I think he really needs to be congratulated for calling the spending level impossible. With that, we're going to turn it over to Jason and see if Jason has anything else to add on deficits and spending.
Yeah, one thing an exercise I did a couple weeks ago was to take all the numbers on this sheet and just look at the growth rate of every line item. And what was interesting is, you have a growth rate for the GMP. You have a higher growth rate for the revenue line, so we're taking more money out of the system, but you have an even higher growth rate still for the expenses. So that's absolutely not sustainable. And like you pointed out, the Medicare and Medicaid growth isn't as high as some of these other items. So it's not really the problem. It's all the other spending, but it's not sustainable. We had this Doge effort, and then expenses are still increasing.
Yeah, it seems like there's a lot of resistance to clawing money back. Doesn't matter where it goes. They want to put it somewhere.
The one place where I've heard there are actually budget cuts is in the healthcare research and life sciences research. So the NIH had their budget cut, and the heaviest agencies under that got cut is the National Cancer Institute. I don't understand why. It's one of the most common diseases, so I don't know why that's the thing they chose to pick on.
With that commentary, using only 10 minutes of our precious 30 minutes, let's switch to our 5 minutes or 6 or 7 minutes of history. I think we've gotten chips up to how Intel became a monopoly. So, Mike or Jason, over to you.
We had talked about Intel initially producing memory, right? I went a little deeper into that transition into CPUs, but the genesis was in the same project. So they produced the first commercially successful DRAM chip for a Japanese calculator company. But that project also had them producing essentially a general purpose CPU that was capable of doing all the functions on the calculator. And that was revolutionary. The calculator is a relatively simple machine, especially when you compare it to the mainframes and the mini computers that were being produced in that era. But at that point in time, you would have all these different chips that were responsible for different functions. And what Intel saw was that, hey, as we can get more transistors on a chip, we can put more functions into one chip. So at first it was the calculator in 1970 or 69, and in the succeeding years they were able to build more of these CPUs. That led them to, I guess it was in conjunction with the moving down from big mainframes to slightly smaller mini computers down to desktop computers. And by the time desktop computers were starting to take hold, Intel had the 8008. It was an 8-bit chip that started going into a bunch of these computers. That business was growing really, really fast. And if you remember IBM, they were a leader in the mainframe era, and they sort of missed the mini computer era. And they came back in the desktop era. But what they had learned through mainframe is that they just needed to be the assembler of all of the components. They didn't need to produce the chips. They didn't have to produce the memory. They could just be the assembler of it all. Where that was wrong is that in order to have a good CPU, you have to have the software to control that CPU. And so whether Intel really understood this fully, that they were going to be that dominant of a position or not, that's what happened. As they rolled into the 80s, as the Japanese memory competitors were competing very heavily on price. So one side of their business was doing poorly, but the other side, the logic chips, were doing better. So they were able to make this major pivot. So there's two things that I think we should cover today. One is the fact that they made this major pivot in business model. And it ties back to some research that Jason and I did last year on leadership within these innovative organizations. And we have a paper that we wrote called Founder Mode, Leadership as Value. And it's based on an article that was written by Paul Graham, the founder of Y Combinator. The concept is that some of these Silicon Valley startups are really like driven by the founder, and the founder has the intuition to be able to pivot and change the business model. And that's a different skill set than what is taught in business schools. So looking back on that Intel situation, would they have made that pivot from memory to logic as would have been as clear to a non-founder?
Was it Andy Grove at that point, or what period? Who was the presiding when they made that pivot?
Gordon Moore was there as CEO until 87, so it would have been Gordon Moore. So I think it's interesting to think in the context of Intel's later history, which we've talked about a lot over the last couple of years, and how they missed mobile and how they're missing AI and how they fell off the leading edge. It is a lot harder for a business once it's kind of matured beyond its founder to make a major change. And then the second thing to talk about is that really was the x86 architecture. I guess it was the 386 that really put them on the map. But the deal with IBM forced Intel to license its technology to another supplier because they didn't feel that Intel, this flighty little startup company, was stable enough to provide them with the chips that they needed. So Intel and IBM chose AMD to be the second supplier. And to this day, they have this cross-licensing agreement. So when we talk about Intel as maybe a monopoly, they actually were a duopoly, and yet still managed to extract excess profits over a really, really long period of time. It's a unique situation where today we would never expect even a startup to give up their IP to supply a product to somebody else. But in that unique situation, IBM was they would have been the Mag 7 player that had the power to push their suppliers around, and they were able to get them to cross-license their IP. It's really just kind of phenomenal that that's what it's been, and that, up until this day.
Yes. We probably ought to put out on the website the parameters for people to order Andy Grove's biography, which, as I recall, the subtitle is Only the Paranoid Survive. At this point, that's probably a good book for people to read. After Andy Grove passed from being CEO of Intel, they sure made a bunch of non-decisions or bad decisions and went from kind of a dominant position to being way behind.
Hi everyone, I'm Daniel Escudero, an ILCA 7 sailor on my way to the LA 2028 Olympics. I started sailing at age 14 in Canada, and after moving to the US, I worked my way up through the youth ranks. Eventually, I sailed full-time in Europe and all around the world while balancing my studies at Webb Institute. My goal is to qualify for the LA 2028 Olympics and win the USA's first ever ILCA 7 Olympic medal. But today, I want to talk to you about something bigger than me, something for the whole American sailing community, the top mark ranking system. With the help of Hunt, Mike, and Ford McCann, it will start off by covering the American ILCA 7 class, and will be spreading soon to other classes. American ILCA 7 sailors currently don't have a clear, fair, and consistent way of measuring performance across domestic and international events. The Top Mark rankings changed that. It ranks American ILCA 7 sailors against each other using a transparent, points-based system that rewards consistency, difficulty, and depth of competition. It gives sailors, coaches, and supporters a realistic way to track progress and encourage more competitiveness. It's not just about seeing who's winning individual events, but it's who's improving or consistently at the top. Whether you're an athlete, coach, parent, or a fan of American sailing, this system makes it easier to understand who's performing. The first ranked event will be the ILCA North American Championships this weekend. I invite you to learn more, check out the rankings, and join the movement at topmarkrankings.com, because succeeding at the Olympics isn't just about talent, it's about building the right foundation. You can also follow my journey, support my campaign, or learn more at escuderosailing.com. Go USA!
We need to move on now. There's a lot of publicity on people in the AI development looking for ways to avoid using NVIDIA chips. Google has a chip, Amazon's working on a chip, probably OpenAI has a team working on a chip. But it occurred to me in reading about this or thinking about this, that they're all dependent on one foundry, TSMC. And TSMC, here we're getting to page 3, doesn't have unlimited capacity to make these bleeding edge chips. And there's a question for Jason. How does TSMC handle that? I mean, obviously they can make more margins, and if they believe their counterparties are strong enough, and I guess an Amazon or Google or an Apple or whatnot strong enough, they can start to build more capacity. I suppose one of the things that they could do is try to campaign, have the Intel capacity that's been built in Arizona, not too far from where the TSMC capacity is, to kind of put both those areas of capacity to leading chips under TSMC's control. Or how long a period does the new CEO of Intel get to show that Intel can do it on their own? Jason, I mean, 6 months, 12 months, 3 months, what do you think? Especially if there's huge demand by people who want to try to do their own versions of the GPUs to try to avoid the NVIDIA tariff, as they're calling it.
Yeah, I hope it's more than a year, because right now the industry is extremely dependent on a advanced packaging process at TSMC. So it's not so much as the production of the wafer itself, but how they package the layers of semiconductors printed into the chip, into the final finished product. That's a proprietary process that TSMC has, that all of the leading GPU, TPU, all the AI chips are making use of, including, I believe, Apple's processors, their neural cores. So Intel doesn't, they have a competing product, but that's not what the industry is using. So the runway there for the new CEO at Intel has to be longer, or long enough where they have to convince some of these hyperscalers to design chips for that process, prove them out, and then send them to production. So that's a couple year cycle. Last week we talked about, you had asked, threats to NVIDIA's margin, and I think TSMC is one of those threats. They are the monopoly on producing these chips across the industry. TSMC has a long history of treating their customers fairly, and in exchange they get pretty deep knowledge into their end user demand. So TSMC, speaking of TSMC, they're extremely sophisticated in how they plan their capacity additions for the next year and the next couple years. And they seem to have threaded the needle correctly this whole time, where they don't overproduce capacity and they just meet industry demand. So they've been making Apple's chips for a long time. Apple gets the leading node. There's not a glut of Apple chips out there. There's not a shortage of Apple chips for the iPhone. We've never had iPhone shortages. So they've almost exactly predicted demand, and they're very sophisticated in that. So what they've spent or forecasting the spend in CapEx this year, I don't have the exact number offhand, but it's a dramatic increase again, and that would foreshadow a huge increase in chip production and AI chip demand.
Yeah. It looks like, in looking at page 3, that my numbers are probably backward looking a little too much as compared to forward looking, but it looks like TSMC is not spending more than half of their free cash flow, not too much more than half of their free cash flow on CapEx. That seems, pretty disciplined.
Right, and the expectations for their CapEx is about $40 billion for 2025.
Yeah, and they've doubled that advanced packaging process they use for the AI chips. They've doubled that every year for the last handful of years, and they're going to double it again.
Did that packaging used to take place in China?
Yeah, packaging used to be a very low value service. So a lot of those low value services flowed to countries where the labor was as cheap as you could get it. What's happened in recent years is there's been these new packaging techniques that enable you to connect your high bandwidth memory in a better way. And maybe Jason can explain it better. But the point is that it's much more complicated than it used to be. And as such, they're doing it in different places.
At a high level, we've surpassed the point where we can make transistors smaller. So you can't pack more transistors in the same volume by shrinking them. So they've found clever ways to package more of them into the same chip volume to continue, Moore's law.
Right. Quickly, any other news on page 1, 2, or 3, or 4? And we gotta leave a little time for healthcare news.
Meta's contracted more nuclear power demand.
Yeah, I was going to say that. Yeah.
Yeah. Do you have? I don't have more details beyond the highlight headlines.
I can speak to that. It's very logical. I mean, that reactor would be retired. Reactors have about a 40-year life, and $1 billion or more needs to be spent on it. And they've signed a contract that'll permit Constellation as the owner to spend that money. So it's a very lot, and the power will still go into the grid in Illinois. So Meta, when they're determining how green they are, will be able to count that. It's a very logical deal. Good for everyone. Good for the ratepayers in Illinois. It's good for Meta. It's good for Constellation. It's good all around.
Yeah, and we're based here in San Diego, and a huge military community. One thing we've heard is that Google is hiring a lot of the nuclear engineers coming out of the Navy. So kind of interesting there.
Yeah. I don't see too much on page 1. I mean, Musk is back in civvy, so to speak. So that's news.
There's a story on Apple, and that apparently they have a homegrown AI that they claim is competitive with ChatGPT. So it's not clear if they're doing it with a partner or whether they're doing it completely in-house, but from the sounds of it, it was in-house.
That'd be impressive.
Yeah, so we'll keep an eye on that one.
Their own version of DeepSeek or something like that.
Right.
I think if they come out of the gate with their first public product and it's on par with the latest models, it kind of would tell me that there's not much of a moat to this.
Or it'll tell us that the leading companies, which are Google and OpenAI, have been withholding product, which, I think you could say that that's pretty likely it's happened. It's much easier to once you figure out what the innovations the other guys are doing, to do a fast follow strategy, a lot more capital efficient. So all of that is sort of up their alley, up Apple's alley. They don't like to overspend.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
So the video today is quick and dirty. We have the whole Sail GP French team here. along with some youth from France and our Oyster Bay High School sailing team. We're going to go out and do 3 races on the Match 40s. It's part of the Sail GP, all on board, Accor hotels, and my friends from France. And it's so cool to see the kids bonding instantly. A little bit of bravado, as you would expect out of teenagers. Have a great day, and we'll see you in New York. There's still some tickets left. If you go to racingcalendar.org, click on the Sail GP date for Sunday. I believe Saturday might be sold out. See you soon.
And now back to the show.
Back on page 15, so we can do some healthcare. I think I noticed that BioNTech had done a deal, I think, with Bristol Myers, had a pretty big number on it, but probably over time. I guess Bristol Myers was licensing some of their cancer technology.
They did, yeah. They sold a 50% stake in one of their bispecific antibodies to Bristol Myers. And I believe the number is $3.5 billion, but it's before it receives approval. At first glance, I thought that was kind of a bad decision. You know, BioNTech certainly doesn't need the cash today, and the results of the study were very promising. The drug looks very promising. But then reading more into just bispecific antibody treatments in general, and what that means is if one antibody treatment is going to target both the pathway that tumors use to create blood supply, so vascular connections into your blood supply, along with the path that they use to hide from the immune system. So you're targeting both of those at once, slow tumor growth, let the immune system attack it. Sounds great, except the first generation of these drugs are already approved, and looking in the details in the studies, it's not clear to me that a bispecific antibodies is any more effective than taking both of the individual drugs on a combination therapy. So if anyone has any information on that, we'd love to hear a different opinion. The only benefit we've heard so far is that dosing could be simpler, and you could have maybe less drug interactions if you're taking other treatments in your cancer therapy. So drugs do receive approval if they have better dosing timelines and easier for the patient to adhere to it, but maybe it's not more effective. It won't be a better, cancer treatment, per se. So then looking from that lens, it's, maybe it was a good deal for BioNTech to kind of de-risk it, get $3.5 billion out of it and out of that research program.
I want to start with Lilly. Lilly's stock has started to pull back. It's still very high value, but is this competition for their weight loss, or how do you, or just trees don't grow to the sky, or what's your read on Lilly?
I do think it's competition on the weight loss drugs. Their competitors right now are the compounding pharmacies, and there's kind of a price war starting, going direct to consumer between Novo Nordisk and Eli Lilly. So they're now pushing the price of this drug down to, I believe, $400 a month, where initially we were talking over $1,000. And a lot of people are using it, but it's just going to keep getting cheaper. There's the next class of these drugs haven't been approved yet. Novo and Lilly, they're ahead, and they submitted for their pill form of it to be approved. But there's a whole host of smaller biotechs that are kind of fast following with their own therapies that are in pretty advanced clinical trials right now. So I think it's a matter of looking ahead, that this won't be a cash cow forever.
Yeah. That this is one where competition can come from a lot of different angles. We often think of the IP being protected and getting an approval creates a natural monopoly, but that's not actually the case if there are many routes up the mountain, if you will. And it seems to be that's the case in weight loss.
And I think that this happens in a lot of drugs, and people find what works and then they copy it, but the timeline to copy it is maybe a decade. But in this class of drug, it was originally approved for diabetes treatment years and years ago, and then they realized it has this certain effects on non-diabetics for weight loss. So that realization kind of was made by everyone nearly at the same time. So Lilly and Novo had the head start because they'd already had the diabetes therapy, but now everyone's doing the target for weight loss.
And next thing is a great thing to close this week with. I think UnitedHealth Group is the largest PBM operator, and Jason, for perfectly good reason, Mike and I agree with, just thinks PBM is just terrible, should be done away with if possible by regulation. But UnitedHealth Group, which is now halved, and they've replaced the CEO and they have accounting issues. These numbers are from the 10K, but when I'm sure the numbers are going to go down when I look at the 10Q. But at some point, UnitedHealth Group has shown that they can manage a lot of cases, a lot of data and whatnot. At some point, are they essential? In other words, if you came up with some type of health solution to try to solve our spending, like Medicare for everyone who wants it, aren't we going to be awfully dependent on entities like UnitedHealth Group in the private sector to manage that process for a Medicare board? Or Jason, you first, because I think you're just going to not be very happy about even thinking about UnitedHealth being investable. You go first.
Yeah, Mike and I have had this conversation of, did it get cheap enough where it is investable? It doesn't make you feel good, but they kind of are indispensable. They're such a big part of the system in administrating Medicare, as well as they have a huge line of clinics. So it's a big part of a lot of people's healthcare, and it's not going to go away. I think we just need to add a lot of transparency into the system, and maybe these businesses won't be as profitable. We definitely need to change the incentive where rising healthcare costs will increase the profit of UnitedHealth Group. We can't have that. It's got to be, kind of a pay for results situation. So I don't know how it looks in the end, but I don't think UnitedHealth Group's going away.
Well, here's one way to think about it. Is it possible to remake the American healthcare system with United Healthcare?
No. They're not going to be incentivized to change at all.
Well, right. So then the way that you would remake the American healthcare system is to ensure that United Healthcare is destroyed.
As it looks today.
So that's kind of how I've been thinking about it.
Yeah, they're vertically integrated. They shouldn't be able to do that. Mm-hmm. Yeah.
You guys have to work this out over the next week. we'll do the exhibits, and then we'll do more chip history, and then we're going to swing into Mike and Jason on whether or not the secret to the U.S. healthcare is to have United Healthcare turn into ashes. And with that, everyone be healthy and stay well, and we'll be here exactly 7 days from now. Take care, everyone. Bye-bye.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to, and no reliance should be placed on, the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information, and no obligation to update the information or analysis contained herein in the future, and may or may not hold positions in the securities mentioned.